It is so important in your nonprofit to have a diversified revenue stream and not just be relying on grants, especially in the current environment. Since I have ran a nonprofit as the board chair for many years, I have experience and I have the business background to help you through understanding what you need to do to diversify your income streams. I feel your pain in this, and I want to help you with other ways to raise funds that are not grant dependent. One way to increase your revenues from a local perspective is to reach out to your local chambers of commerce, to your local commissioners, to your community foundations, and to corporate partnerships. Those are all ways to get funds in the door that do not rely on grants, but rely on the goodwill you have in your community. And I highly recommend you make those connections and those partnerships. Another way you can raise funds is fees for services. If you do something, for instance, if you provide therapy and you have some clients that you provide it for free or reduced cost, but if you can provide it at a more of a for-profit business rate to others in your community, that's not unallowed. You may have to pay tax on it as unrelated business income, but it's allowed. So that's another way, to have fees for service. A third way is to get your individual donor base pumped up. Really use social media to get your message out there and be consistent with your posting. You want to be top of mind for people to know what you're about and know what your needs are so that they can come alongside you, feel your passion, and help you to raise funds. I have a good example of a nonprofit that I ran, the community center that I ran for about 10 years as the board chair. We ran into a situation back in 2016 where we had a satellite senior center on site, and we were paid rent, basically, to run the program, and we had some grants that helped fund the program. The attendees had been dropping off, and we got to the point where they were going to have to shut the center down because there wasn't enough attendance to keep it going. So we found this out a few months before it happened, but this was a drastic revenue reduction for this nonprofit, and we had to quickly pivot and say, what can we do to get money in the door to bridge the gap where we're losing this revenue? So what we started doing, the community center had rentals, 3 buildings that it rented out. So we really began to market the rentals and get people in and showcase what we had to offer. So we were able to, after several years, 10 times our rental revenue to bridge that gap. And we also leaned in on our annual fundraiser, which is a road biking event, and we're able to 3 times our revenue from that with both individual entry fees as well as tourism grants that came alongside us to help us get the people in to do the cycling event. So those are some strategic ways you can look at getting revenues in the door without being too grant dependent. So back to the community center nonprofit that I was running in the 2012 through 2023 timeframe. So I told you that in 2016, the satellite senior center had to shut down and we had to get some additional rental revenues in and some annual fundraising revenues in. Well, what happened in 2020? COVID hit. And what did we do as an organization? We rented out space for parties and reunions and all those things that we could no longer do because of COVID. So here we are again with a revenue shortfall. In fact, our executive director went for several months without pay. We did avail ourselves of the payroll protection program loans, and she did get some pay through that. But it was a very tough time. We actually had to go into debt to just keep the lights on during that period of time. So I've been there too. I've been there in the tough times, and I can tell you that what saved us during that time is our relationship with a local community foundation who knew what we were doing and knew what we were about, and was able to grant us a 2-year capacity building grant that allowed us to pay off our debt, allowed us to get our executive director's salary up to comparable salaries and hours of other organizations. And that's what saved us after COVID. So again, those relationships are so key to getting your financial foundation and getting those funds in that you need to operate. Implementing robust financial tracking and systems for the financials of the nonprofit organization are key to managing your organization. So talking about financial management, recently a client came to me who had a need to move from a cash basis to an accrual basis of accounting throughout the year instead of just at year end for audit purposes. They didn't really have the financial personnel on staff to make that leap, and their audit had a material weakness statement, which is something that raises the eyebrows of a stakeholder or funder looking at the organization for potential grant or funding. So if you have that situation where you might need to get an outside consultant to come in and help you get your financials in better order for stakeholders, that's something I would encourage you to reach out for help. Sometimes you just don't have enough staff and you can't afford to hire the staff to do it in-house, but there are resources available to help. So that's a big deal when funders are looking at your audit. They don't want to see anything that might raise an eyebrow as to how well you are managing the organization. So that's an example of needing good financial reporting. With the same organization, we were able to put in another financial platform called Fathom, and that takes the financials from QuickBooks Online and feeds them into a program that calculates key ratios, performance indicators, and tells you how you're doing compared to your targets and your budget. And it's just great information to look at, mostly the trend line. You want to see positive trends, not necessarily at a point in time, but you want to see how you're trending with your financials. So that's another platform that I highly recommend, but you need something to track, to properly manage. I highly recommend accrual accounting and not cash. You need to have your systems in place so that when you do have your audit, it's easy and it's an audit that funders can look to and have assurance in. So I hope this has helped you understand more about how you can have different revenue streams and use that to increase your nonprofit's mission. Stay tuned for the next video in the series where I'm going to talk about adaptability and data-driven decision-making and how that can help your organization to move forward.